Today is March 1st, and it's an important date because I continue to buy into the four companies that I invest in: Costco, Microsoft, Google, and Chipotle. And I want to go a little bit more in depth of why I invest in these four particular companies. Let me share with you my full thesis on Chipotle. Now, when it comes to Chipotle, this is a company that has built 300 stores last year and is going to build 300 more stores next year. All right, this upcoming year. With that being said, this is the business. Every time I eat at Chipotle, I feel like it's an amazing experience, you guys. Like the food is fast, it is definitely not like the millennial burger shops. It's kind of the opposite of that. You get good amount of food for a good amount of price, and it's quick. When I think about Chipotle, you guys, one of the main reasons why I invested in Chipotle is that it reminded me of See's Candy. And See's Candy, in case you guys don't know, it's a chocolate company that Warren Buffett invested in. And the reason why Warren Buffett invested in this particular company was that See's Candy is a business that had pricing power. That every single year they would raise the prices on their products, and the consumer would literally just keep on ordering it. They would buy it up. And that's one of the theses that I have going on for Chipotle, that because the food is so good, and it's a charging at $10 for a chicken burrito, that they have the ability to charge at $11, $12, $13. That's the thesis on it. Not only that, you have additional stores coming in. When it comes to their international stores, I'm thinking they have almost no international presence, so that this is a good way for the company to grow in the future. So in the next 20 years, I definitely expect Chipotle to be thriving and still existing. One of the issues I did have with the business is that Chipotle has a supply side issue, meaning that every time Chipotle opens a store, it has a difficulty finding employees for that store. And that's exactly where AI comes into help. Because right now, when it comes to hiring process for Chipotle, they're trying to make the business more efficient using AI so that the hiring process can be a little bit more faster. It can be easier for the right candidate to be found in the job. Now, my second company is going to be Costco. And what can I say about Costco? I mean, this is a company that can make money during good economies, and I personally believe this is a company that can make money during bad economies. The way they make money, Costco, is through reoccurring revenue through the memberships. And I love this type of business so much because it's a boring business, yet it's such a predictable business. Because this is a company that has such a strong moat that even during bad times, when people lose their jobs, what are you gonna do? You're gonna stop eating groceries? You're gonna not order at Costco? Because Costco sells items at the lowest margins. If you look at their mission statement is literally bringing quality goods to members at the lowest possible price. And because they sell prices at the lowest margins, I believe that at any point, if any of the other competitors get hit with tariffs, Walmart, Target, Sprouts, I do believe that Costco has a unique advantage here, that because they sell items at the lowest margins, that customers will flock to that business. And you might be wondering, Andy, isn't that bad because they're not going to be able to make as much money? Well, for the way Costco makes money is through the memberships itself. It's not through the margins. The idea of Costco is to get reoccurring revenue through the membership. And the nice thing about the membership is that Costco is able to retain members at the rate of 90% or higher. So what that means is that out of 100 people that has a Costco membership, 90 of them are going to re-sign for at least another membership, 90 or more. And this is the business, you guys, that if any of the product is struggling, well, you're out of there. It's a very tough industry to get into, because any vendor that wants to get inside a Costco, you have to make sure that the numbers make sense. Because if your product is not selling, although you've been there for a long time, Costco is always willing to go ahead and give new vendors a try for their business. And one of the things I love about the growth expansion of Costco is that they have less than 1,000 Costco's in the world right now. I definitely believe there could be more Costco's worldwide, especially in places with high urban concentration, such as China, right? You build more stores in China, and you can have a bunch of memberships all within a single area within that place. Also, when it comes to Costco, one thing I love about this company is how predictable it is. When I look at the predictability of Costco, that it can make money during good and bad economies, it is amazing. And when you look at the revenue chart, it's literally almost like a single line going upward, right? It's a linear line. I love that so much. One bad thing I could say about Costco, though, is that the cash flows sometimes can be a bit unpredictable. And when it comes to Costco's PE ratio, I get it. The company does is selling at a high price right now. My justification for this is that it's a high price for a reason, right? This is a company that is essentially a powerhouse, in my opinion. Now, the third company I invest in is Microsoft. Now, Microsoft is in a similar boat where after 2020, I seen this business grow during COVID era, that it can make money during good economies and can make money during bad economies, right? It's not like a cruise ship when bad economies occur, the business is struggling. People don't go on vacations as much. But when it comes to Microsoft, I love the moat they have that even during bad economies, what will you do? You're not going to get rid of your computing power. You're not going to get rid of Microsoft 365. You're not going to get rid of Microsoft Azure, something that you need to run your business on. And when it comes to Microsoft Azure, I could just see this being a powerhouse in the game. One unique advantage that I love about Microsoft Azure compared to the other cloud computing is that Microsoft Azure is the sole provider to ChatGPT. So because of that, they have a unique advantage in being able to experience AI issues, right? When they're building their new AI data systems, oh, they will have a lot of experience because of ChatGPT. Now, I understand that Google and AWS has anthropologics. However, it's not on the same scale, you guys. People use ChatGPT a lot more than Google Gemini or the other anthropologics, the other competitors of ChatGPT. This is a business that I believe is scalable, is able to grow. The business is only getting more efficient over time. I love it. In 20 years from now, I can still see this business existing and actually even thriving because of how much compute power that we need. That cloud computing business is just getting bigger and bigger every single year because we as consumers are building more and more data every single year. And then my last company, which is Google. What can I say about Google? This is a company that has the ad search business, that has Google Cloud growing. You have YouTube growing as well. You have other bets like Waymo, which I can actually see in 10 years, Waymo being a big chunk of the business because it is growing exponentially. Now, there's a couple issues that's going on with Google right now. It has a lot of downward pressure causing the PE to drop to under 20 PE ratio, which is crazy to me that Google is trading at a way lower valuation than the S&P 500, especially when I believe Google has a lot more ways to grow than at least 50% of the companies in the S&P 500. Like when I think about Google and how Nike has a higher PE ratio than Google, when I think about how Starbucks has a higher PE ratio than Google, it's just mind blowing to me, especially when the items that Google sells is digital. It is not a brick and mortar store. It is very scalable. But people have a lot of issues with ad search going downhill. Now, when I invest in Google, people have told me that, Andy, ChatGPT is taking over Google. That Google search is no longer going to be the primary search engine that we use. And I do agree in some ways, I disagree in another. All right. There's definitely going to be other options that compete against Google now, where people can look up explanations on ChatGPT. I totally agree. However, there are certain things that is just way better on Google. For example, when you need to look up on how to invest, which brokerage accounts to invest in, you'll get a bunch of ads showing the top ways to invest. If you need to look for local things like what are the time hours, what are the phone numbers of particular businesses. Google is very, very good at that. There are certain things that Google is good at, certain things that ChatGPT is good at. The best way I can think of this is Netflix and YouTube. Just because Netflix is making amazing shows and continues to grow, that does not mean that Google, YouTube is going to be destroyed. I think about it the same way like that, where just because there's ChatGPT will be great in certain things, such as maybe doing your math homework will be pretty amazing in that. Maybe learning history will be amazing on that. But when you need to search for a particular product, you're going to do that on Google search. And I believe this is something that is still where Google has such a strong power in, and it's going to take a while before Google gets destroyed in that. With that being said, the Google is trading at lower than 20 PE ratio. I'm utilizing this opportunity as much as I can to buy more of this company because a company that is scalable, it is growing in Google Cloud, it is growing in other bets such as Waymo, it is growing in YouTube. I believe this is a company that can succeed future on. And I actually think there will be certain institutional investors who get into the company just because of how great of a valuation this company is at. I am aware Google has the monopoly lawsuits that's going on right now. However, I think we are a bit past that. I think there's the idea of Google being broken up. I am betting that it's not fully going to go through. Now, if it goes through, that would definitely be a shocker for me. I need to see how the company gets broken up. Yet, to me, the bet that I'm making for why I believe in Google so much is that this is a company that's not going to be broken up. And if that is true, that the lawsuits end and the period of Google going through lawsuits is over, that would be an amazing opportunity to have bought into Google stock. And with that, you guys, this is my reasoning for why I invest in my four companies and why I will continue to dollar cost average. Because these four companies have built my net worth in the past, and I still continue to believe that in the next 20 years, these four companies will be more efficient and they will be thriving in the future. And with that, you guys, I will see you guys in the next episode. Bye bye.